Once again, thank you all for joining this webinar on e-invoicing. For the panel today, we have with us Manish Saraf, who's a partner with S&B Consulting. He's an ex-PwC and Deloitte, a lot of experience in process reviews and taxation. Manish is also one of the founding member of the Taxation Society, and we're starting with our e-invoicing journey. Also joining us today will be Prakriti Dangi, who is a director with S&B Consulting. She is ex-PwC, a lot of experience in direct taxation and transfer pricing and with invoicing. Bhakti Virani, senior manager with S&B Consulting, is also joining, also an ex-Big Four with Deloitte. A lot of experience on implementing e-invoicing in other countries and jurisdictions. We also have with us Mr. Praveen Sawant, who is from Taxilla, our technology partner. We will definitely be talking about the role of S&B and Taxilla and the partnership between S&B and Taxilla during the presentation. I am CA Manish Bucha, managing partner with S&B Consulting, experience in process reviews, ex-PwC and KPMG. Can we move on to the next slide, please? In terms of what we intend to cover today, we are going to give a brief introduction about S&B and Taxilla. We are also going to speak about the key requirement of e-invoicing as mandated by UAE FTA. Briefly also explain about the five-corner model, which is being implemented in the UAE. And we are going to deep dive into what are the key requirements, what the businesses need to do to prepare themselves for the e-invoicing regime, which will be implemented soon, and how S&B and Taxilla can help you in your journey, and what are the key challenges that we foresee may be there during the implementation phase. A brief introduction about S&B. Technology experts. We have been providing a lot of services in the region and primarily into taxation, transfer pricing, risk advisory, management, and business consulting, including other compliances. And with us, we also have our technology partner, Taxilla, which was founded in the year 2015 in the US. They are a regulatory technology platform that helps simplify tax regulatory compliance through very low-code automation. Taxilla is a certified people access point provider. They are having all the required certification required of an IT firm. And they are working in more than 25 countries across the globe, helping businesses implement e-invoicing and other tax compliance requirements. Currently, very busy with the Saudi market with more than 500 clients implementing the e-invoicing requirement in Saudi. So in terms of Taxilla, 2015 is when they were founded. They are a certified people access point provider. They have provided e-invoicing solution in Asia Pacific countries such as Malaysia, Singapore, New Zealand, Australia, European countries like Germany, France, Poland, Middle East countries like UAE and Oman. Currently, they are working on Saudi. They are already there. Jordan, the Philippines, and growing with wherever the e-invoicing regime is being implemented. In terms of S&B, S&B is also now registered with the PayPal Authority. And S&B is in the process of becoming an accredited service provider for e-invoicing with the FTA here. So for the next section on the presentation, I will request Prakriti, please, if you can take it forward.
Sure. Thank you, Manish, for the introduction, and thank you everyone for being here and for sharing the awareness on the e-invoicing, what's the trend across the globe. what's happening in the UAE, and what are you required as a business in the implementation of the e-invoicing so that you are compliant and not affected by any of the penal provisions that are there. So, e invoicing, as the term suggests, is electronic invoicing. But does it mean that a digital invoice that you generate from your ERP or your SAP systems is an e invoice? To answer this, it's no. An e-invoicing is an electronically generated and shared and validated invoice which is exchanged on a digital platform, which also received by the receiving entity or the customer through this platform. So the concept is not new. It has been across the globe. For example, around 80 countries in the world have already implemented or are in different phases of implementation of e-invoicing. UAE has recently been introducing the e-invoicing where they have started their journey way back in 2023 by announcing an e-billing mandate for the UAE businesses. And going forward in 2024 and 25, they have released the data dictionary. And as well as they have laid down the path by releasing ministerial decision 243 and 244 by putting down the timelines and the thresholds for the same. The journey of e-invoicing in the world started from Latin America, where it was introduced to culminate the shadow economy or check the tax leakages in the for the VAT. It was initially for the government tendering and other processes, which started in Mexico, Chile, Argentina, and other South American countries, but later gained importance while in Europe, Italy was the one to initiate the e-invoicing in 2090s. The other countries to follow in Europe were Germany, Portugal, Romania, Greece, Belgium, Poland, and now it is also the France and Spain which are implementing the e-invoicing right from 2025 and onwards in the years to come. In Asia Pacific, there are countries which have a soft mandate for e-invoice. However, for government authorities, the e-invoicing has been in place before as well. In India, the e-invoicing journey began in 2020 and it has been released in various phases, and that is how it's implemented to the GST registered businesses. The other countries in Asia Pac are Malaysia, Thailand, Philippines, which are actively looking for rollout plans and soon to be implemented. While we are in UAE and we talk about Middle East, including the GCC region, the countries such as Saudi Arabia was the first one or the pioneer to begin this journey in 2021, where they implemented this through a Fatura platform. Again, we will take you through how the e-invoicing implementation and the mandate in Saudi Arabia is different from what is in UAE or Oman. But it has been implemented there, and currently they are running in various phases. Currently, they are running in wave 24 of the implementation. Countries like Egypt and Turkey have already started implementation of the e-invoicing. UAE and Oman are in process. In UAE, the thresholds and the manner in which it is to be implemented is released, and we will walk you through the whole process. And the other countries as well, where VAT is not there, and they are expected to implement this along with the VAT as well. So as we say that there are more than 50 countries that have already announced that they will introduce e-invoicing, or they are in process of introducing and implementing there in the country. So why there is so much about e-invoicing in the globe? The answer to this is it helps the governments and the tax authorities to check on the VAT fraud and the leakages that they have as a result of the shadow economy. It certainly improves the compliances that they need to do. It increases the revenue. So countries have seen that while they have implemented invoicing, their tax revenue has also increased over a period of time. Overall, it also helps them bridge the gap of their nationwide mandate for bringing their economy on a digital platform. And hence, it becomes not just a tax mandate, but a government mandate which helps the overall governance of the economy and the nation. So there are various models of implementing the e-invoicing. In very short, there is centralized, which is continuous transaction control method, where the invoices are validated by the tax authorities. A classic example of this centralized or CTC model is Saudi Arabia, where they have this Fatura platform on which all the invoices are validated and confirmed, uh, after which it is called a successful e-invoice. The other model is a decentralized or a DCTC model, where the tax authorities only collect the tax related information, whereas they use a network such as PayPal, for which the digital exchange of the invoice happens. There are other methods such as post reporting, where you issue an invoice first place, and there is a timeline for, say, 24 and 48 hours, during which the invoice actually can be raised on an invoicing platform. And then there are also hybrid models, which are a mix of a decentralized or a centralized and post reporting, where, for example, India has a kind of hybrid model where for certain entities, the invoices can be raised later, but for some, it has to be raised immediately. So, talking about what is there for UAE businesses, because all of us have businesses established in UAE, and what we need to know and take care about while we are in the phase of implementation. So, first thing is understanding what the e-invoice is. So, as I mentioned, it's an electronic exchange of invoice. It is it has a structured invoice format, which is XML, or it is also called a machine readable format. So, a regular invoice that we see on a day-to-day basis is not a machine readable. A machine cannot read it, which is what differentiate a regular invoice vis-a-vis an e-invoice. The MOF has also released in their consultation paper about the standardized data fields. So there are around 50 mandatory data fields which are required to be captured in every invoice. You might or might not be capturing all these 50 fields as of now, but as you jump on to the implementation of e-invoicing, you need to compulsorily take care that all the 50 mandatory fields are being implemented as per the PINT AE model. Now, there could be a cases where there are 16 use cases where some of the requirements might be there. For example, it could be 49 or 52 mandatory data fields, but majorly it is a 50 mandatory data fields. As we discussed earlier, UAE is implementing a decentralized five-corner model. So there will be 5 touch points through which the invoices will move, and right from the supplier who is issuing the invoice, it will move to the ASP of the supplier. It will go to the recipient's ASP where it's validated and goes to the recipient at the end. The role of the FT or the government is only to collect the data. Again, the invoices are not validated or approved either through a QR or any other means by the tax authorities in the UAE. We are utilizing PayPal network for applicability or implementation of the e-invoicing, where a business needs to connect with an ASP. It needs to register with an ASP, and now recently the tax portal also has a button where you can appoint an ASP. Broadly, there are 9 pre-approved ASP as released by the list by the MOF, and soon they will also become the registered. S&B, as Manish mentioned earlier, has also in the process of getting registered as an S&P. So we can also support you through end-to-end journey in the e-invoicing implementation. Now, these e-invoices are the real-time invoices. For example, if you are raising an invoice now, it takes a near to real-time basis to reach to the end of the customer. So, as on date, if it used to take a few days or even certain instances where the customer may have certain criteria to approve the invoice. But here in this case, both the supplier and the customer need to have an ASP appointed, and the invoice flow through that ASP, which is embedded or integrated with your existing ERP or the accounting systems. Now, the implementation is into different phases. Not many, just like KSA, but majorly in two phases, where the invoice, where it is first applicable on a B2B or a B2G transactions for large businesses, and for small businesses at a later point in time. So, if we go into the nitty-gritties of the deadlines and with what is required to do as a business, and there are the e-invoicing compliance for the large businesses, which is having a revenue of more than or equal to 50 million dirham during the year. The compliance need to start from 1st January 2027. For other businesses, which is less than 50 million, the invoicing compliance need to start with effect from 1st July 2027. However, when we say that it needs to start from these timelines, it is important to understand that the whole process of onboarding on e-invoicing is a time taking process. We need to do a detailed readiness assessment of the processes of the IT systems, evaluating and selecting the ASP, and testing an UAT for all the processes. And hence, even if we say that the start date is 1st January 2027 for the first phase, the whole process should begin way back. And the today is the right time to start implementing and onboarding on this journey. So this is the first step, that we understand what is required to do, and the next step is to review the business process and the IT processes. uh, in terms of understanding of the revenue, so revenue means the gross earnings of a business that is in the for the recent financial year as per the accounting standard IFRS. So even in the corporate tax, there was a mandate for the businesses having a revenue of more than 50 million to follow IFRS and get the audited financial statements done and to be uploaded on the portal. Similar thresholds probably is mentioned here as well, and that is how the revenue will be calculated. And the other thing is that ASP needs to be appointed by the business, and that needs to be done on the portal as well. So you once the final list of ASPs is released, you need to go there, select the ASP, and that's how you comply with the norm. There are penal implications even for if you're not registering yourself as an ASP as well, and we will take you through there at a later point in time. Apart from the mandate of the e-invoicing implementation, there are pilot projects where there are two kinds. One is where the FTA leads a pilot program. They invite businesses from various industries across, and for the e-invoicing implementation for a robust testing. And secondly, they are also encouraging the businesses to voluntarily implement the e-invoicing. The good point here is that any of the penal implications is not applicable on the pilot program users or the voluntary implementation. It's only applicable effective when they have to appoint an ASP or they need to start the e-invoicing. So again, if you want to a robust system, voluntary implementation is one good solution that we would recommend you for this e-invoicing journey. For other businesses, of course, the e-invoicing compliance start from 1st July 27. So if you see, there is not a very big time gap between first phase and second. So every business, it's the right time to start onward on this journey. There are certain excluded businesses which are not required as of now to comply with the e-invoicing mandate. One is the government entities which are functioning on a sovereign capacity. The other is the international passenger transport, where the airlines are issuing electronic ticket to the customers, or any other ancillary services that the airline is using However, it should be with an electronic miscellaneous document. There are other conditions as well, where scenarios where for example, financial services which are exempt or zero rated, those are also excluded from the scope. And the last is all the other transactions where the ministry can, at any point in time, can include any business scenario for the exemption. Now, we might have heard a lot about e-invoicing from here and there, and this may lead to, half knowledge as well. And we assume certain things that may happen. However, here we are there to clarify those misconceptions or the myths and bring you on the right page. There are certain misconceptions such as if e-invoicing will come, it is gonna replace the VAT rules. But to clarify you here, the e-invoicing is a government mandate. It is not specifically a tax mandate. So the tax regulations or the VAT law will remain as it is. Any amendment which is coming in the VAT law, you need to run accordingly. However, e-invoicing is a separate bit which only deals with generating, sharing, exchange of electronic invoice in a structured format done digitally. Now, there are other misconceptions such as business need to directly engage with the people authority. However, there are ASPs, which are the accredited service providers, which are already registered with the people, which are already registered with the MOF and the FT authorities here in the UAE. And the business need to connect with those ASPs. The ASP is a service provider that provides you the capability of digital transformation of these invoices and exchange of invoices. So your touch point needs to be the accredited service provider, and the list of which is being released by the FTA. Right now, it's just a pre-approved list. Soon, a final list will be released. The other thought is that once e-invoicing is being adopted, the VAT returns will be filled automatically. However, as of now, there is no such announcement that the e-invoicing will also capture the VAT return. However, eventually, when e-invoicing will be sitting for all the businesses across, it might happen that the VAT return are maybe populated with the help of it. But as of now, the process of preparation and validation of the VAT return remains to be same, which is the process for business, business as usual remains the same. Now, there are also questions such as the e-invoicing is only applicable for the mainland entities, the free zones, or the entities which are non-VAT registered are out of the scope of e-invoicing. So it's nowhere mentioned that it is only applicable for the businesses which are VAT registered. It only says that any business that has a revenue exceeding this threshold. So all the businesses, the need to be taken care of is the threshold and the transactions, which is B2B or B2G. Important point to note here that for the purpose of calculation of those 50 million dirham, you have to take care of all the gross revenue from the business and not consider only the B2B or B2G transaction. So, for example, your revenue consists of B2B and B2C. You have to take the whole, both of them, total it, and see whether the threshold is being met or not. Now, the other misconception is the ASP will take care of the VAT compliances. So, again, it's a big no. ASP is only providing a technical platform. It will integrate with your accounting systems or the ERP systems for digital transmission of the data of the invoices. But your VAT processes remain same, and the team that are doing currently needs to follow the process that they are doing as of now. Again, the FTA will have access to the transactional data or the tax data. So no record keeping is required by the business. But this is again a misconception. The business need to retain all the invoices and all the supporting document for a proper VAT compliances, which is typically 5 years for VAT. So a proper information and awareness in the e-invoicing journey can bring a very seamless process implementation, and hence awareness becomes very important here. Very recently, the FTA has also released a cabinet decision 106, where they have released administrative penalties on failure of e-invoicing implementation. The scenarios are if the business fails to appoint ASP on time, for which the penalty is 5,000 per month or part of the month. Then there are penalties across e-invoicing where you're failed to issue or transmit invoice, either the invoice or the credit note, which is the electronic credit note. For both of them, the penalty is 100 dirham per invoice with a monthly cap of 5,000 dirhams. The next is any kind of system failure, be it with the provider or your accounting system, whereby exchange of e-invoice is not happening. In that case, the business needs to notify the ASP, notify the FTA within the time, and in case of failure to do so, there is a penalty of 1,000 per day. So either it is a recipient who fails to notify the FTA or the issuer of the invoice. Both have a separate penalty implications for 1,000 per day or part of the day. Then there is a failure for the registered business to update the registered business data with the ASP. So in case there is any change in the business data that needs to be updated with the ASP and the FTA, for example, change in your TRN number or any other business information, and in the failure to do so may imply a penalty of 1,000 per day or a part of the day. So we must be wary of where we should not go wrong so that we are saving ourselves from the administrative penalties. From here, I will ask my colleague Bhakti to take us through the various data fields for e-invoicing.
Thank you, Prakriti, for taking us in detail and explaining us the e-invoicing framework. So now, good afternoon, everyone. Today, what I'll be taking up is the two critical components of e-invoicing. One, which is the data dictionary, and two, the use cases of e-invoicing. Before we start with why it is critical is that because this provides the field of information which an invoice is required to be captured to be said that it's compliant with the e-invoicing regulation. The FTA in the consultation paper issued in Feb 2025 had provided these draft data fields and use cases. While this is still in draft stage, but we can still start working on this and start configuring our system to see what are the changes we should perform to be compliant with e-invoicing. So now, what are the standard 50 fields? As you see on the screen, there are 50 mandatory information which an e-invoice is required to capture. Apart from this 50 standard fields, there could be certain additional fields which would be applicable to different use cases, which we'll see in the next slides of what are the fields which addition to this 50 an invoice is required to capture. So now, first, if we see what are these 50 standard fields, we can break that into 6 different heads. The first one being invoice details, which should mainly be the invoice number, the invoice type, that is whether it's B2B, B2C, export, zero rated, the currency of the invoice, the mode of payment, etc. The second head would be the seller details, which would be the seller name, the seller address, the seller trade registration details, etc. Third would be the buyer details, same, the buyer information, address, the mode in which the buyer would be sending the e-invoice, etc. Then we would have the document details, which would be line-wise details of every transaction. Suppose line item wise for every good and service, what is the value, what is the discount offered, what is the tax, and what is the net amount, and also the net payment which is due from the customer. Then we would have a tax breakdown, which would have details of the taxes levied, the rate of tax, the value of tax for each line item, and then certain additional fields like the currency in which we are generating the invoice, the unit of measurement, the quantity, and all. Apart from this 50 standard data fields, there are 15 in these 50 standard data fields, there are 15 such information which currently is not being covered under the UAE VAT law. If you see on the screen, we see there are certain line items highlighted in red. So these are those 15 standard fields which are currently not being covered under the general invoice format under the UAE law, but going forward will be required to be captured in an e-invoice. So now if we take that in detail, what are these 15 standard fields? The first one being the invoice transaction type code, which is basically there will be a drop-down list defined by the government, the FTA, which will give the nature of transactions, like whether it's a B2B transaction and export B2C RCM margin scheme. So basically, based on the type of the transaction, we'll be required to check that field and map it to our invoice. The second field being business process type, similar to an invoice transaction type code, there will be a data field defined by the ministry, and we'll have to select from that whether a transaction is a B2B, B2C transaction, and accordingly plot it to the invoice. Then we have something called a specification identifier. That is a code which the FTA will give to identify an invoice. Every invoice will have a unique code to know which document number refers to that e-invoice generated. So that code will be auto-generated at the ASP level end. Then in seller details, if we see, there is something called seller electronic address. So this is the mode in which we will be sending our e-invoice to our customers. That is, whether it could be an email ID or it could be a platform address, that is our ASP platform address or so. Then the next is the seller electronic identifier. This will be a unique ID which every individual registered on the e-invoice portal will get. This ID is basically, you can get this ID once you register for the e-invoicing on the portal. Then we have seller legal registration identifier type. That could be the trade license, our trade license details, commercial license details, or any other licenses which we have received from the government. We could refer to these as a legal registration identifier type. Then in the buyer, similar to seller, buyer will also have an electronic identifier and an electronic tax identifier that would either be our TRN or the mode of communicating, which we'll get it from the FTA. Then in the document totals, now earlier it was okay if at the end of the invoice we had a consolidated total value, the tax and the net value. Going forward, line item wise such information will be required to be provided. Then we have a total of the invoice value without tax, and then the total after tax. Also specifically how much is the payment due from the customer will be required to be captured on the invoice. That could be net of the advances or the credit notes if any we've received. So if you see overall, there are 15 such fields which additionally a new invoice will be the e-invoice will be required to capture from the existing data fields which are already required under the VAT law. If you see, all these information is very critical to be captured, because any of this information are not captured in an invoice and we send that invoice to the ASP, that will fail the validation and it will be sent back for rework. So to avoid that time gap or to avoid any errors, it is important that we start working today and start plotting this information with our existing data fields which we have in our systems, and see what are the additional fields we require and obtain that from the required customers or the vendors and update our masters. That is a critical action point as of today to start plotting this information. Now, apart from these 50 standard fields, there are certain additional fields which an invoice is required to capture based on the use case of the invoice. So if you see on this slide, there are 16 use cases which the FTA has given. So if we are engaged in any of this nature of business, then e-invoice will apply and we will be required to generate an e-invoice. I would like to reiterate what Prakriti just mentioned. There's one misconception which everyone has is e-invoicing is applicable only if you're registered under the VAT law. That's not correct. E-invoicing is applicable to all businesses. That is, even if today you're only engaged in making exempt supply or a non-VAT supply, or exclusively into zero rated supplies for which currently VAT registration is not required, But for e-invoicing, you will still be required to generate an e-commercial invoice. So the e-commercial invoice will have similar fields like a regular e-invoice, which is the standard 50 fields, excluding the VAT field. So it would become around 49 mandatory fields, which an e-commercial invoice would be required to capture. So now if we deep dive into what are these use cases of e-invoicing, on the screen, if you see, the first one is the standard tax invoice, which we just discussed, which would have just the mandatory 50 fields. The second use case, if you see, it is the reverse charge mechanism. That is all the cases where the buyer pays the tax under the reverse charge mechanism. Examples currently for import of services we have, or for the oil and gas sector, which we are currently doing. So apart from that 50 mandatory fields, you will also be required to capture an indication on the invoice saying the invoice is subject to reverse charge mechanism. What is the type of good or services that is being supplied? If the buyer is registered, then the TRN, and the reason why we are paying tax under reverse charge mechanism could be the reference of the article under which we are covered to qualify as a reverse charge supply, mention all of that. So these are the additional fields. Some of these fields could be mandatory, some of these fields could be optional, but still we are awaiting for the final confirmation to see what's mandatory and optional. But most of this mostly would be required to be captured in an e-invoice. Next use case, if we see, it's the zero rated supply, which is the exports or certain services which are exempted, like first sale of the residential building or the financial services. Here, the invoice will be required to clearly capture or indicate that this transaction is subject to zero rated supply, and also provide, in case of export of goods, provide the details of the shipment reference, the airway bill number, or the exit certificate, or the bill, or any other custom declaration document reference which we get from the FTA or the customs authority. Then if we see, there is something called disclosed agent billing. So this is cases wherein the airline travel agents or the real estate brokers, they bill on behalf of the principal. Here what would be required is the agent would be required to capture even the principal's name, address, and the TRN details, clearly state on the invoice that he is billing on behalf of the principal, and also provide his own details, that is the agent details. Then similarly, the another use case of e-invoicing would be a summary tax invoice. Summary tax invoice is basically applicable wherein generally to banks or the telecom service providers who give you one invoice at the end of the month for the services provided during the month. So here the invoice would be required to in addition to the 50 data fields, will be required to capture the entire summary, line item wise, the services provided during the month. Also mention the start and the end period for which the summary invoice is being generated, and give reference to any transaction IDs, if any, provided for every line item of the service provided during the month. Then we have, similar to summary tax invoice, we also have continuous supplies. That is, if there is an AMC contract for which services are being provided, say for suppose 3 years, so for every year we would be raising an invoice under the continuous supply mechanism. For that, the invoice would be required to capture the start and end date of the supply, the indication whether we are billing on a monthly, quarterly basis, and also refer to the contract. So if we go on to the next slide, the balance use cases. So here we have, in the previous slide we had captured 18 use cases, 8 use cases, and the other 8 are here are listed in this slide. So here if you see, we have something called an e-commerce supply. So any supplies which we make through e-commerce marketplaces, apart from the 50 fields, we'd be required to capture the platform TRN, provide the customer and customer details, and also the online transaction ID of the order placed. Then we have something called a standard credit note, or for any credit note issued by an agent or a standard to cancel any transaction, for return of goods, adjusting the prices, etc. We would be required to give a reference to the original invoice number and also provide the reason for reduction. Currently also, while this is mandated under the VAT law to provide this information, but we see instances wherein most of them do not mention these or capture these information. But going forward under e-invoicing, if you do not capture this information, your invoice or the credit note will not further be validated. So it is essential that your credit note captures all of this information to meet the validation. Then similarly, like we discussed for commercial invoices, that is if you're engaged in exclusive transactions which are not subject to wax or exclusively into zero rated supplies or exempt supplies, then you would be required to capture all the 50 fields except the VAT amount, because that would not be applicable. So apart from that, all the fields would be applicable. Plus, you would also have to indicate on the invoice that this is a commercial invoice and not a tax VAT invoice. So the key takeaway from these two slides is we will have to conduct a detailed gap analysis of the existing fields being captured in a current ERP system for invoice generation, plotted to these 50 new data fields and the additional fields based on the use case of the nature of transaction. And once we identify the details which we currently are not capturing in our system, reach out to the customers, vendors, obtain that information, update our customer vendor masters, and configure our ERPs to raise a compliant e-invoice when the law comes into place, that is on the 1st July 2026. Thank you all. That's all from my side. I will now hand over to Mr. Praveen to take us through the 5-corner PEPAL model.
Thank you, Bhakti. So, Prakriti, can you make me host so that I can share my slide?
Praveen, I believe you have to share your screen for this.
Yeah, okay. Thank you. So, hello everyone. I think you got a fair idea about the UAE e-invoicing because Prakriti has explained you more about the e-invoicing concept and what is happening in the world. Second, Bhakti has given you more insight about the data fields and everything. So after talking all the theoretical things, my job is to show you how really it will be benefited, how it will get implemented with your accounting or ERP systems. So that is what my role is. So let's start with what is the 5-corner model. Maybe you have know about the 5-corner model. So I will just simply go to the advanced feature of the PEPAL 5-corner model. Typically, if you see, when we talk about the 5-corner model, so it's like you can take the example of the telephones. Okay. So like here, the supplier is a typical supplier is like a person who is handling one mobile, which is you can say a Apple phone, and a buyer is having the Android phone, and the supplier is having their own telephone operator like Etisalat, and maybe the buyer having the particularly Vodafone. Now, if they want to exchange the SMS or any text between them, they need the operator, right? So that operator is nothing but a access service provider. For the supplier, there is one, and for the buyer, there is one. And it's a choice, okay? So no government is forcing you, no, you have to particularly select those operator. No, it's like a your evaluation. You think like this is the best operator for me, their service is good, their background is good, and we know him very well. So typically that is the case where when you select the ASP on a MRR tax portal, there are certain criteria you have to check, and based on that you will select the ASP. So similarly here also there is a two ASP, they are talking to each other, and a corner file is nothing but a telephone department, a government body who is monitoring your every transactions, every messages, every telephone calls, log file, everything. So how they are exchanging the data? Because there is an operator. So similarly, when I talk about the 5-corner model, so here also in this 5-corner model, mostly if you talk about this 5-corner model, you will see mostly. So if you see here, this corner file is nothing but your 5 touch point or 5 stakeholder who are experiencing or exchanging the data to each other. Now, you know the concept like A C1 is sending the data to the corner 2. Now, how basically it is work? It's work with a PEPAL four-corner model, which is a AS4 protocol. So in simple language, if I talk about this thing, so first we need to integrate with your ERP system or accounting system. Okay, once this is done, your accounting and ERP system is the main where they are going to generate the e-invoice. Okay, they are going to generate the invoice that will be flow to the corner 2. Okay, now corner 2 responsibility to validate the data and then convert that into a pinned AE XML format, which is a document you need to exchange to the corner 5 and corner 3. Now, as you know that it's only a tax invoice, credit note, debit note, what Bhakti has given, that document type. No, more than that, you can also exchange any document. For example, if I talk about the construction site company, or there along with the tax invoice, they have to share the test certificate, like another company where they have to share the test certificate, packing list, or any JPG or PDF copy or Excel file. You can also exchange all these documents with the buyer. So you don't need to share once again a email to them separately, and you are sharing the tax invoice this thing. So this is the one more advantage, that manual work is gone. You don't need to share once again all these documents to the end customer. Okay. Now here, first, when you send the data to the corner 2, they will validate everything, and then first they will share this corner 3. Like how they will come to know. Just like I gave the example of telephone operator. So SMPL and SMP you consider as a global telephone directory or global address directory. So when you have a TRN number of buyer, the ASP, which is a S&B job, to find out the who is a buyer first. He will find out whether buyer got a PayPal ID or not. That he will find out from SML. Okay. From here, he will come to know who is registered for the ASP for the buyer. So it may be a SNB or some other legal vendor. Okay. So after that, he will share the invoice to the corner 3, and at the same time, he will share the invoice to the corner 5. Now, in another case, for example, you are coming under a phase 1, but your customer is not under a phase 1. So how you will come to know? So SNB will provide the buyer lookup value. So if you have your master data, customer master data or vendor master data, SNB can find out whether all your TRN number of your vendor and customer having registered with a PayPal ID or not. Okay, so that is the additional services you will get it. Now, once this particular data will be shared with this corner 3, he will validate, and first he will message the corner 5 that I accepted the invoice or rejected. And then after acceptance from corner 3, the corner 5 will be basically inform corner 2 that I accepted the invoice. Okay. Now this is what the complete flow is. Now here, one more thing I wanted to tell you, that once this corner 2 get the confirmation from 3 and 5, what as a customer IT team or finance team, what you want to understand, whether 3, that is buyer received our invoice, and FTA is accepted or not. So that message S&B will give it back to you, that you have to store in your system for the audit purpose. Along with that, there is another field called UUID, which is a unique for each document. That also S&B will share with you. Now, here, if you see here, this what I am talking about, the AR side, where all your data will get exchanged between seller and buyer. Okay. And when I say validation means what? They are not validating whether your PO number is there or your particularly bank account is there. No. So here validation is, as Bhakti told, it's a mandatory and conditional mandatory data and the structural data. Structural means pin A format. So 99% you will not get a rejection from the corner 3 and corner 5. So how as a buyer you will reject it? If anybody want to reject the invoice, It's a traditional method. It's a outside of the system. So once this corner 3 accept the invoice, it's deemed to be accepted by buyer. It means buyer 3 can't reject the invoice. So buyer has to reject the invoice. Okay, that is point number 1. Second, here, once you receive this, you are happy. Okay, but after 2 days, now consider there is a 25th of December, you as a customer, seller as a things, issue the invoices to the buyer, and after 2 days, buyer rejected the invoice to the seller, right? And buyer told one of the procurement guys or sales guys that I am rejecting the invoice. But seller has not issued the credit note. Okay. After 3rd January, he come to know that I have to pass the credit note. But when he has to file the return or pay the VAT liability, that invoice maybe 1000 dirhams is a VAT amount payable. He has to pay to the FTA. Why? Because FTA data say that 1000 is a payable amount to the seller, because he don't know whether buyer has rejected or not, because buyer has to pass the credit note. Now this is the case where you need a gap assessment, as Prakriti and Bhakti is telling, that why you need to change the process of your AR and AP, because this is what will happen. Today, your VAT return is a summary VAT return, but after that, it's a transactional VAT return. So these are some of the things you need to understand. Similarly, your AP process also you can automate. So I explain you AR side. Now the same seller is also buyer. When buyer, their ASP is also S&B. Why? Because one TRN number, one ASP. So whenever any of your vendor issuing the invoices, it will always basically receive by S&B ASP. And then you have a choice to ask to the buyer. If buyer want directly post the data to the corner 4, that is a buyer, to their ERP, they can do it. Now, what is the advantage here? Your AP process is automated. No more manual entry, no more mistakes, timely booking of AP invoice, and last one is a compliant invoice. So if somebody from your side know about the India or Saudi Arabia e-invoicing, their procurement team always receive the vendor invoice. They have to scan the QR code, check the government portal whether this XML is right or wrong, because they are not sure whether it's a fake invoice. Because if it is a fake invoice, Fatura portal or Zatka will not allow the input tax credit. But here you don't have to worry, because the invoice what you are receiving is coming from ASP, that is S&B. Okay, so this is how basically a four corner work. Definitely, it's a phase manner. You need to understand what are your current process, and based on that, you should do the change management. Okay, now when I talk about the integration part, so let me show you in a product itself that how integrations work. Okay, so first of all, Bhakti told you about the data fields, 50 fields, and all these things. So she is more talking about the FTA side, VAT side, okay? But it is more than that, okay? So this is the metadata of UAE. Here you will see mandatory and conditional mandatory fields, okay? This is first when S&B team will do the IT impact assessment. This is what the gap assessment they will find out between your ERP or accounting system and what is required by FTA. So this is the first mandatory, conditional mandatory field is required. Second, usage. So if you see here, there is a PIN, Taxilla, and FTA. FTA is all this. So what is PIN? PIN is a format from...
Praveen, sorry to interject, but we cannot see the screen. If you can just check if the screen is shared.
Okay, sorry.
Thank you.
It's visible, Praveen.
It's visible, right?
Yes. Maybe your pointer was not visible.
Okay.
Anyway.
So here, this is the things you need to do. Then validation. See, typically most of the ERP and accounting system, they don't have a validation. So what they do, they just miss the information. It means there is a mandatory fields are required, but your user has not captured in your accounting or ERP system. Definitely, S&B as a ASP, they will just reject the invoice. They will give you the error. So these are the validations we are keeping before accepting your data. Then there is a lookup table. So lookup table is more on a structured matter. So why typically any country they introduce e-invoicing other than tax evasion, all that things. The main thing is a structural data, because if somebody is using a SAP, they called VF01 as a tax invoice in their ERP. Somebody is using accounting system. Everybody's document type, number, name is different. But FTA say that no, I don't want that. Whatever you called in your accounting ERP system, you have to give me 388 number for that document type. Okay. Suppose you are calling Dubai as a state, but I don't want Dubai. I want DXB. If you are basically giving some credit note reason allowances, whatever this table say, I need this value from your side, or I will reject the invoice. Okay, so this is what the default mapping we will do. As a SNB, we have a technology where whatever you are calling, just tell us, we will map it. You don't need to customize your ERP. So there is a long list of these things. Okay, now typically how the system works. Okay, so this is our platform. Okay, and then this platform, let me log in and just show you some functionality which will be used. Then we have a two-factor authentication with the OTP base and
Mr. Praveen, I think you're sharing your screen, which is a portal, but we are only seeing the screen of your PPT, of the deck.
now you can see.
No. Yes, it is visible now.
Okay, so here okay, so here first thing is you can see this screen where we have a multiple integration options. So for example, there is a very big group having the 10 or 20 companies, and they are using different ERP or accounting system. So if you select S&B as a ASP, so S&B should support it, right? So suppose you are using a ERP system which allows the API integration. So we have options here for API. If they say I don't, my another system don't have the API particularly support, then we have a FTP. Okay, then here we have a tenant subtenant concept. So right now, if you have a 10 20 different companies, okay, and everybody's has their own accounting system, but the management is same, and the tax team or finance team or CFO wanted to see a one view, how they will see. So here the group name and a subtenant. So you have a multiple legal entities will be the subtenant. If you have a multiple location branches will be the subtenant. If you are doing multi-country business like in Saudi, Oman, and UAE and any other Asian countries, you don't need to search another vendor. S&B will be there. He will support for all these things. Okay. And then here, this is the AR and AP. Okay. Now, when you talk about the AR side, all the data, what you are going to store, it will be seen here. Okay. You can see here all the data which will be available here. Okay. And then if there is an error, you will see the error here, or you will see under the review part. But if everything is okay, so you will see an invoice submitted. So you will ask me whether I should come to this platform because I'm using SAP, Oracle, or any other ERP system. I don't want my business user to come out of my ERP system, right? This is what everybody is required. Why manual work, double work, right? So for that, this is what the API we give, which will work in a background. And your IT team will discuss with S&B team, and then we will provide this API. It means your business user will only use your accounting and ERP system. Okay. And less than a 10 seconds, their job is done and all the reports, everything this. Now, then who will use this portal? The portal will used by the management team, tax team, finance team for the reconciliation purpose, from the reporting purpose, from the dashboards, the data storage, archival. Now, all these things is required. I will tell you why. And here you can see a success message and how you will get it. C3 response accepted. Now, when we connect to the C5, you will get a C5 response. And along with this, you will get a UUID, which is a unique for this. And plus, consider there is a reconciliation required because there are few of your vendor, they are not under e-invoicing, few are under e-invoicing. Then whether FTA GL is not matching with your GL, whether it is reported or not. So all that reconciliation is required. Second, when we talk about the AP side, so how you will get a AP invoice, because your IT team and procurement team say that I don't want automations, okay, but I want to see the invoices. So here you will simply come here, okay. There are 3-4 options S&B is giving. So one, if nobody suppose somebody want, I don't want to download the invoices, okay. So here first option is they will get a report here, all the daily invoices they can download it here. But how they will come to know, because your vendor will send anytime. So once the vendor issue the invoices, there is a email goes from SNB to you, your procurement or whoever nominated person, that you got a purchase invoice. So option number one, I can directly send a email or with a PDF copy, of AP invoice to your procurement team, or at a day end, you can just download it all. And third, basically, I can directly post to the ERP. Okay. So here, these particular things will give you a complete package, whatever the type of ERP system you have, or whatever particularly you have systems, all these options are there. And you can basically you can see the reports here, whether my transaction is successful or not. All that reports are there. Plus, here I explain you two things. Now, consider there is a one more company of yours. They say, I am not generating the invoices every day. I am into a service industry, so I have a monthly billing options, and I don't want any integration. So here you have a simple options of uploading the Excel sheet data. You give the data, upload it. And one option is there is a one firm of yours where they have a 5 to 10 invoices per month. You can come here and simply upload the data. Okay. So typically, this particular platforms will solve your all the problems related to your ERP systems, integrations, and everything. So this is all from my side. So now I will invite Mr. Manish Saraf, and after that he will take care of these things. Thank you very much.
Yeah, thank you, Mr. Praveen, for taking us through the corner 5 structure. And so until now, we have understood what is the applicability of invoicing, what is all about in UAE, and also about those 50 data points which are going to be critical to be captured on the system, and as well as those 16 use cases where each businesses, some of the businesses would have different kind of transactions falling under the 16 cases. So as we now all know about the background and also the some background on the corner 5 structure, so it's now important to know that what you have to do. Now, as Prakriti was highlighting that though there is a timeline, there is a threshold of 50 million, and it is phase by phase manner it's going to implement in UAE, but you still need to be ready for that. Though the first applicability, or you need to identify your ASP by July 2026 for the business whose turnover is more than 50 million. And then in the next year for the business which are less than 50 million, they have to undergo by 31st March 2027. But in between the time, as we see that the transactions which are there, what current system you are using in, And also, I saw some of the questions I'll just address during this discussion itself that you mentioned about the applicability. Some of the businesses are curious, like, this is applicable for B2B and B2G. So B2B is business to business. So someone who's having a business of a rental income and he is deriving this rental income from an individual, purely that is the only business source of income. So for them, it might not be. Even for the retail business who's only doing retail trading business, only deriving that is the only source of income. But in case he has a mix, so suppose if there is a company who's having both commercial rental as well as the residential rental. So now, because your commercial rental would be your B2B business, whereas your residential rental would be B2C, but when you cover the threshold of 50 million, you have to take both the revenue. So revenue from your commercial rental or revenue from your residential rental. So both has to be clubbed together to see the eligibility and applicability in the phase one. So whoever having revenue more than 50 million in the rental business from both sides, for them it would be applicable. Another scenario which I want to talk about is there could be a distribution business and a retail trading business. He have someone who's having both the business together. Like for retail trading, though it's a business to consumer, it might not be applicable. But when he has having both the business together, so for distribution business plus the retail trading business crossing beyond 50 million in the phase one, it would be applicable to them. And also there could be scenarios, say, even if you are not, VAT is not applicable, like in case of a high sea sale, your third post shipment, where your business is not taxable under the VAT, you might apply for the exemption of the VAT registration and you might not have the VAT registration. Still, you need to apply because this e-invoicing is applicable irrespective whether you are registered in a VAT TRN registration number or not. Still, doing a business to business dealing, B2B, you would still apply. So that means someone who's having a business from Singapore to Saudi or any other region, India to Malaysia, whatever, third port shipment they are doing, and that is the only source of income. Though it is the VAT is not applicable, still they need to go and have this e-invoicing applicability. Now, understanding this, though the timeline has been defined in phase manner, but you still need to act now, as was pointed by Bhakti and Prakati, that there are those 50 data points which has to be captured. So you need to analyze right now to see what current system, whether you are using Tally or QuickBooks, Zoho, any other ERP systems, SAP or Dynamics, you assess that what are those 50 fields are being captured. I'm sure there are 50 mandatory fields which are already not there in the current system. So that needs to be defined, and you need to assess those 16 use cases. As Bhakti was mentioning, those 16 use cases need to be identified, whether it is a standard invoicing or your reverse charge mechanism invoicing. And you would also see that someone who's in the business, like on a project or a contracting business, they would see that their invoices would get rejected by the customer for whatever the commercial terms not being met. So you need to assess those scenarios before you go into the implementation. So those assessment has to be done. In what scenario you might be need to do a credit invoice raising, because those invoices can be rejected by your vendor because of the commercial terms. Even you pass through that the data validation with the ASP through the XML system, but even then they might reject it because of rejection is because of the commercial terms. They will not going to process the payment. Then you need to issue a credit note and then issue a fresh invoice. So there will be a delay in the whole process of getting your transactions routed through. So you need to assess those transaction scenarios for which there could be rejections or credit note required, and what all additional fields you need to capture, which is beyond those 50 data fields which Bhakti was referring to. So beyond these 50 data fields, there are additional fields on those 16 use cases. So do we have those data fields? Do we have that data information available? And specifically with respect to the customer or your vendors, do we have those master data updated? Because there are a lot of additional informations which would be required. So you need to check around that. And also, does your system support? Is it your system capable enough to capture those data fields in the current system? So So this is overall a project. It's a business transformation project. People have to look around. It is not only the tax, but it is from the current process, the systems they're following in need to be evaluated, assessed. And that gap analysis has to be done, that, where you stand today vis-a-vis the requirement of the e-invoicing platform, which has to be followed. So this has to be assessed before you go and actually identify your ASP. The ASP will not do this all gap assessment. It is together with the tax team. You need to see, understand the applicability requirement, and then also the technology or your IT team also need to be looked into it. And where we as a service provider have both the bandwidth that we have experience in the UAE jurisdiction on the VAT assessment, on the VAT applicabilities, and also we have the technology support, who can carry out the ASP service together. So we can help on those assessment. And then, those as the next bullet point, if you see the data integration, what kind of integration methodology you would want to adopt with the ASP. So it all depend upon the current system which you are using. How supportive is that? So there are three categories of integration which Mr. Praveen was referring to. Was basically your real-time API-based integration, which is directly integrated with your system and pull the data through those ASP to the FTA authority, or to the buyers through their ASP. Or there could be a batch basis, like your data is not daily on real-time basis going to the system of ASP provider, but it is going over the week based on the number of transactions you have. Or there could be the third method, is a manual upload in the format provided by the ASP, which will be uploaded into the system of a ASP provider and sent across to the FTA and the other ASP of the buyer. So those methodology need to be assessed. It only be assessed when we know what is your current system and process. And also it gives a chance to automate a lot of internal processes around. The reason being, because you might come across a scenario that there could be sudden rejections, which might be because of the commercial terms, as I was mentioning, that for a contracting business, which is basically a work certification basis, your customer has to certify the work project based on which they will process. They might see some commercial conditions are not being met, even you are meeting all the scenarios of your ASP data fields, but if because of the commercial terms they might reject it, then you have to create a credit invoice, which is again a time taking. So rather than waiting for that manual process, so you need to identify what are those your internal process which can be automated, which will help you to streamline your validation, the controls in the existing processes. If that is built in, will help you to effectively implement and get into the right time. Then, of course, the technology, you need to see what technology you are using and do we need to change? I mean, with the current systems, whatever you're using, is it there or not? And then, of course, the ASP will integrate and implement the technology, do a pilot test run. And because you need time to validate, you cannot just wait until the date of actually go live. You have to do the pilot testing. So this would require at least 2 months or whatever time, depending upon your business, you need to validate. And that's why the government has come in that someone who want to participate as a pilot test run, they can still go from July 2026, or do a pilot test, do a parallel, their own business, as well as do a pilot test to see if the data is everything flowing correctly or smoothly. So as I talked about in that overview, this is basically some key highlights which need to be looked into it. So primarily your assessment, which is a gap assessment, need to look from the process perspective and as well as the IT infrastructure or the current structure which you have, primarily identifying different types of transactions, which are 16 use cases, like you have export, you have zero rated or exempt category supplies, what all those fields would be required, how those invoices are currently being generated, and what can be automated in that particular cycle. And specifically the customer database or the vendor database, do we have those information? Do we have that field in the master database which need to be populated or captured when you do an invoice generation? So that need to be looked into. And of course, from the regulatory compliance framework perspective, whatever is, as per the tax regulatory authority requirement from the FTA perspective, that in case of zero rated or exempt category, what are details or the logic which need to be defined? Do we have that in place, and that system is supporting for those? And then IT infrastructure. So since most of those, the ASP can integrate with most of your systems. Basically, you be whatever SAP or Oracle or even for Tally also that can be integrated, but you need to still assess. And specifically in case of retail trading business, they have multiple systems, multiple ERP being used. For point of sales is a different system, for accounting could be a different system. So you need to see how well the data flow and integration is happening within your current structure, and what all changes need to be done. So that need to be assessed at this point of time. And then of course the data fields which is required, do we have as per the PINT, that is PayPal International, those data fields, 50 mandatory data fields which has to be captured. Do we have it, well captured, the fields are there or not, and how do we go about in changing that? And this would require, continuous dialogue within. It is not only like a tax team who's going to do it. It is basically the finance team and the IT team, and then the support of the consultant. You need to assess and involve each of your business stakeholders, and that would require a multiple coordination. And that's why we are, recommending that is to start looking around these changes which need to be done, evaluating your current system right now, because you might think that, as this is 31st July is the time when you go for identifying or selecting your ASP, but then there's a lot of readiness required to get in, and if you delay this process, then you ultimately do a lot of changes which might be creating a problem and not be adopted by the business users. So because any change which you built in your business need to be accepted by your operations team as well, and that is, they need to be made aware, and they need to acknowledge that, and they had to support on whatever changes you're building in. So it is a joint support with all the team members. So it need to be started, at the earliest time. So what are some of the data challenges, which we feel would be there? As we mentioned about those 50 data structure which are being captured for seller or buyer information, or supply item level details, or tax total, which Bhakti was referring to, those, and the mandatory fields of 15 mandatory fields which are not currently captured need to be captured, need to define. So you need to know what are those applicable for your business scenarios or your transaction scenarios, and we need to assess that, how do we capture these informations. And also which basically, as we see in the right side, those are the something which we talked about, payment due date or tax category codes. These are not currently defined, right? I mean, you need to go the business process type of your basically your supply, your customer, that we need to identify. And also another scenario which I assess that, since there is a threshold defined for 50 million for profitability of the business, your vendor might be below less than a 50 million threshold, but he might not be implemented e-invoicing in the phase one, but you might have. So you have a transaction with some of the vendors who are registered with who are a e-invoicing implemented partner, or some of the vendors might not have implemented for small transactions. They might not have it, but you would still have to report under the VAT return. So that you need to identify those transaction scenarios. Okay, I mean, some of them are in the VAT, some are not in the VAT or vendors, and you want to take that input. So there has to be a lot of reconciliations to be done. So there's you need to assess what are those business scenarios. And then as we mentioned, that it is a kind of a process transformation project, where it is not only the tax applicability, but since you will have this all automation through invoicing of your sales customers and the vendors coming in, but make sure that there is enough of workflow or validation built in before you go and have those invoices generated in the system. Like for example, as I mentioned, in case of your say vendors, you are generally, we have a three-way match of verifying with receipt for GRN being created or service certification internally before you process the payment. So if you auto create that, then if there is any gap on the commercial terms, you would automatically highlight to your vendor, your vendor at the same time. And then before he sends that actual invoice through this portal, you can intimate that there is some gap. No, this GRN is not completely validated because of some commercial terms not being completed, or your service is not being completed for whatever reason. So in that scenario, the vendor would be updated about it at the same time, and he can send the right invoice through the e-invoicing system. And similarly for your customer invoicing as well, if you have that automated process flow of work certification, validation, approval internally being defined before you raise an invoice and being certified, as well as like in case of contracting business, you need to get certification from your customer as well before you raise an invoice. So if that internal flow is well, supported, then this will not delay the whole process of rejections due to the commercial terms by your vendor customer. And then, of course, your cleaning of master data is very much important to see those enough the data fields are supported, and you can capture those important fields. And you have those VAT codes and transaction codes currently being defined in the system. So the overall, in terms of the challenges which we see, is that uh, as you cannot cancel an invoice once it is generated, you will only have to raise a credit note for that. So before you raise an invoice, so you should be well sure, no, in case of your that if it is simple supply or trading business, that will not be much challenge. But when you have service element involved into it, where your customer has to confirm, so you make sure those validations are put in place in the right time, and your system is well supported, that you reduce that possibilities of your invoice cancellation for the commercial reasons, because it will delay the whole process by raising a credit note. Then poor master data. I mean, not like, today we have seen in some of our clients that, vendor master or customer master is not completely updated. For the vendors, you don't have the TRN being captured, or the addresses are not being updated. So that master data need to be updated, because if those are not being correct, then this will create an issue on the validation of those invoices through the ASP portal. And then, of course, when we talk about multiple systems, specifically for the retail business where they have multiple ERP system, then we need to see, what kind of smooth data flow or integration is there between all these systems. And I mean, as I mentioned, that from the governance perspective, it is not only the responsibility of a finance or a tax team, it is family joint responsibility of your IT team and the operations team. The operations team plays a crucial role in this implementation phase, because it is ultimately the operations or the invoicing which is happening for the operations team, and they need to know they have proper checks and balances put in place to avoid the delay of rejections or whatever reasons could be. Now, if you talk about, as I was mentioning, that some of the vendors of yours who are less than a threshold of 50 million might not be under the e-invoicing system, or even like for your imports, which are through reverse charge mechanism, they will not be under the e-invoicing platform, right? So some of them transactions you will have through e-invoicing portal coming to your system for the vendor invoices, and some of them will not be having it. So then in that case, your VAT return will include both, right? Your whatever VAT input taxable the invoices are there as from the vendor side, you will have to include both in your VAT return. So in that case, you will have to do a reconciliation. What is going through e-invoicing, which is flowing through, and what is going in the VAT return? Because the FTA portal will have your e-invoices data for the VAT input perspective, but not those which are not in through e-invoicing portal, right? So you'll have to have a reconciliation documented from that perspective. And of course, with respect to the documentation, the timeline, of storing or archiving this, do you have enough archival systems or the rules being followed for the data storage? So now what we do, I mean, how we have seen that the challenges which could be there, how do we mitigate that? As I have been referring that though the timeline is from July 2026, but you have to start early to assess what is your current system, what kind of transactions you have, what categories those are into, which all are under invoicing, not under invoicing, the data, the master data, is the system supporting that? what all additional fields do we require. So we need to assess that current scenario and start working around, before you go and actually also identify your ASP partner. So those assessment has to be done. And then also you need to make awareness to all your team members, even for operations team, they need to know. The finance team, of course, need to know about it. The technology team, your IT team need to be aware about what all changes would be required, when the system goes live. And before you go and finalize your ASP, but your all this readiness would be there. You need to assess, and that's where being an S&B, both from the tax experience perspective in this UAE jurisdiction as well as the technology, we can help you and assess these scenarios and see what all changes would be required and help them in the complete integration and testing as a pilot run as well. And these are basically some of the clients globally, along with Taxilla, we have been supporting on the e-invoicing. And we, as Bucha was mentioning about that, we have done a lot of Saudi businesses as well on the e-invoicing implementation beside the other European and other countries. So ultimately, if you look around, what are the key points for you to take away, like, the process assessment. You need to assess what are those, what is the current system, the processes which you are following in, the data fields which are currently being captured, analyze the different transaction scenarios into the 16 use cases, and see where do you stand today. Is your ERP system well supportive enough to capture this data informations? Then you need to do those modifications, or also you might need to upgrade your ERP system, which you need to see whether do we need to go and upgrade that so that it is compatible with the expansion and the changes and the regulatory framework. And then, of course, the system integration support, which we can help you on that when we are already applying for that as an FTA approved ASP provider along with Taxilla. And then, of course, we will provide the training. The training is most important with the changes which will happen primarily for your finance team and the tax team to look into it. And because, as I was mentioning, there could be a lot of reconciliations required, as not all the transactions would be through the e-invoicing system because of the threshold specifically from the vendor perspective. That would be need to know for everyone about this. So yeah, now we are open for the question and answers, and we can take up this.
Thanks, Manish, and thank you everyone for attending. I think before I start with my closing remark, there are a couple of questions more which are there and which we can probably take. One of the question is regarding the data field required on e-invoicing. So the question is whether the format of invoice will change and who will modify such data on invoice for 16 use cases. Is it the ASP? Bhakti, you want to answer that?
Sure, yes, Manish. So the format of invoicing will change. So currently we have one specific format. With e-invoicing, the format will definitely change. And this data fields, the company would be required to capture working along with ASP. So first the company will have to update its masters, get all these fields and then work with ASP in validating it. But that fields would be required to be captured by the company. We as consultants, as S&B, can definitely help identifying and streamlining these data fields and helping the company to capture it.
Thanks, Bhakti. The second question is, what is the role of ASP and S&B at the beginning and on a day-to-day basis? Probably I'll take up that question. So in terms of the role of ASP, as Praveen in his model, while he was explaining the five-corner model, he did take an example of the telecom operator, right? So ASP, you can, in very layman's term, you can consider ASP as an operator. So the basic role of the ASP will be the connection between the buyer and the seller to transfer the invoices electronically. So that's in basic role. So whenever a seller is generating an invoice, once that invoice is generated, it goes through the ASP's portal, where all the fields are validated as mandated by the FTA, and then transmitted to the ASP of the buyer as well as reporting to the FTA. The ASP of the buyer will also validate, report it to FTA, accept or reject the invoice, and then once accepted, it transmit to the buyer. So it is more like a telecom operator, whereby when a person from Etisalat is calling another person on a do network, it goes through the exchange, the number is identified, and exactly through the identification process, it knows that where does this particular call need to be terminated or needs to be forwarded, and then the telephone of the person who has been called rings and the person answers. So I hope this gives you an idea about what is the role of the ASP. S&B is going to be an accredited ASP, so we can play the role of your ASP. And S&B consulting is also because of the consulting business, and we do a lot of work on the process gap identification, process improvement, and also on the taxation side, we have the knowledge and capability to help you in your journey to implement e-invoicing. So as an S&B, as a consultant, we can come into your place to look into your existing processes in your AR and AP, identify the gaps, and recommend you certain changes which needs for you to effectively implement e-invoicing, as well as help you with your entire gap assessment and integration for the e-invoicing. Will S&B help you choose the ASP for you? Yes, S&B can play the role of your ASP, and S&B can also help you evaluate the various ASPs who will be there in the market, give you the pros and cons, and for you to identify. So it's something like if you as a person want to take a decision to buy a mobile phone, whether you want to buy an iPhone or you want to buy an Android phone, you look into the pros and cons of both the phones, what features are available, what kind of services are available, what kind of capacity you require, what kind of camera you require. So you do an evaluation. So S&B can play the role in helping you evaluate the various ASPs, and then it will be up to you to take an informed decision as to who is the right ASP partner for you. How about overseas intercompany purchase invoices which are posted in SAP automatically?
Yeah, I can take up this.
Yes, sir.
So now in case of, as we see that the applicability of the e-invoicing is for your B2C and B2B, and this being a B2B and B2G basically. So this being a B2B, because this is an import, this is basically an RCM base where you have an overseas, it could be in Singapore, Malaysia, wherever you have your own group company and you have an invoice coming in from there. So it won't be coming to invoicing portal. So right now that will not be coming because that country might not be supported with a PayPal system, and that's why the government here has not made it mandatory, that those invoices should be routed to the e-invoicing channel because the authority or the country might not be supporting the PayPal system. So that way it may still come directly, you might receive those invoices in your SAP directly, automatically. It need not be routed through the e-invoicing because being an RCM or import.
Just to add here, Manishi, see, if you are importing or exporting to the Oman, Singapore, Malaysia, or any European country where PayPal 5 corner is applicable, then yes, from the SMB ASP, we can export or import these transactions because if it is a Singapore, then Singapore got a format of pinned HG and UAE format is pinned AE. So that conversion of the format and delivering that invoices, whether it's export or import, it's a job of four corner model, which will be managed by S&B as a ASP.
And I will also like to add a couple of points more before we conclude the session. One is something that Praveen was also mentioning during his presentation. As a business, whether you need to integrate for an ERP, your ERP with a e-invoicing portal, whether you can have an access to a portal where you are uploading the invoices on a batch, or because your number of transactions are very low, you do not even want an access to a portal, but you may want to just send your invoice detail to your ASP. and for them to submit it on your behalf on the e-invoicing portal so that it is registered in FTA. So depending on the size of your business, depending on the number of transactions that you do, the nature of your transaction, there are various options which are there. And the beauty with Taxilla platform is that all these options are available and can be supported. It can be integrated with your ERP system by doing a gap assessment with your ERP system and looking into what needs to be changed to do the integration, whether you just need to have an access to the portal or whether you want your ASP to submit the invoicing on your behalf. So all these options are available, and based on your business transaction and the size of your business, those decisions can be taken. The second thing, what Manish Saraf was mentioning was in terms of do not look into the implementation timeline, which is 2027, beginning of 2027 for 50 million and more revenue, business revenue, or July 2027. Because one is you need to mandatorily select an ASP by mid of June 2026. And before that, also you need to do an assessment based on your business size. You need to decide whether what is the right model for you, whether you need a complete integration, whether you need a process, and then looking into your AR and AP processes, whether you are currently capturing all those mandatory data fields. That kind of assessment needs to be done. What needs to change in your process so that you are able to gather. If I take a very simple example is that as businesses, we are all used to a KYC at the beginning of onboarding a supplier or a customer, whereby we obtain the document. But then over a period of time, this document expires. Whether if we talk about the TRN, which is going to be your tax identifier number, if those changes and those are not communicated on time, either on your side to your supplier or from your supplier to yourself, then the validation will fail. Because if the data is not updated, which is there in going to be there in the FTA, the validation will fail. So your processes need to become robust enough to ensure that those areas are identified, the critical areas are identified, and you have a robust process to ensure that all this information are updated on a timely basis. So this was just one simple example, but depending on an assessment of your current business scenario, your processes, a lot more might be identified, a lot more gaps that needs to be plugged in. So it's better that you start early so that you are in compliance with the requirement and you do not fall under the trap of the penalties which has been declared and which was discussed by Prakriti at the beginning of the presentation. With this, I would like to conclude and thank all the guests who had attended today's session. We will be sending out an email with a link to the presentation for you to refer to. It has all the details that we have discussed today. It has the detail of the key personnel in S&B that you can reach out to if you have any queries or you want us to help you in your e-invoicing journey. So we look forward to connecting with you. Any questions you might have, please do write back to us. This panel today had more than 100 years of collective experience in the field of process reviews, in the field of indirect taxation, as well as technology and e-invoicing. I'm sure that we will be able to respond to your queries. We will provide you the specific guidance which is there from the FTA or the mandatory requirement from the FTA. And for areas which are still not identified or spoken about by the FTA, from our experience of helping other organizations across the globe on their e-invoicing journey, we will definitely be able to share with you the basic concept and answer your query. Thank you so much, everybody. It was nice having you today for this webinar. And thanks to my team, Prakriti, Bhakti, Praveen, and Manish.
Thank you very much.
Thank you so much.
Thank you all.